Everyone, my name is Kate and I'm a financial technology advisor here at Hyperbots. Today, I'm delighted to have Jon Naseath with me. Hey, Jon, how are you doing?
Hey, doing good. Thanks.
It's great. So, a little bit about Jon. He is the COO at Cantu Capital Inc. Today, Jon and I will be discussing sales tax computation and transaction dates. So, let's dive right in. Coming to the first question, which date is generally used to determine the applicable sales tax rate on a purchase and why?
Yeah, when I saw the topics for today, the question of like some could say, well, who cares? But let me
Mhm.
let me tell you why we care a little bit first, actually. Especially coming into the year end or whenever your year end is, if depending on the date of what you recognize as the sales tax rate and which rate's going to be applied, it can be different one year to the next. And so in some ways, it could be manipulated if you're trying to push it out to be a certain date or pull it in to be a certain date. But recognizing what date is required for tax is critical for sales transactions. So the answer is that most commonly what you'd use for tax requirements is the invoice date. And so again, to say the invoice date, that's different than revenue recognition rules in most cases. And so the date is typically used by tax authorities as the official date for recording the sale, confirming that the buyer's obligation to pay is engaged. That's really when there's viewed as an agreement is locked in for the first time. And when that's established, that's what they want to use as the transaction for tax purposes. So just to clarify, if the invoice date is October 15th, even if the shipment happens later, say we'll say Black Friday happens later, October 15th is the date that you're going to determine the sales tax rate, not other dates.
That makes a lot of sense. Moving on, why isn't the shipment date usually used as the date for sales tax determination?
And then shipment date is usually a key one for revenue recognition. Everyone's focused on, do you get this product shipped out before, in this case, the quarter end or the new year fiscal cutover. But yeah, for tax purposes, this is again where you have kind of different accounting rules for tax versus for, accrual accounting. And for tax purposes, it really is the invoice date, not the shipment date. The main reason is that while the shipment date reflects when the goods are sent, it's not regarded as the final point of sale for the tax purposes. And so most tax authorities, again, would focus on invoice date because it signifies completion of terms. And that's when you're now ready the work's been done. It's confirmed that you're ready to be paid. And the tax wants their money when you invoice also. The tax authorities do. So again, if the goods are shipped on November 20th, right before Thanksgiving, but are invoiced November 15th, the November 15th date is when you'd apply the tax rate or recognize it for tax purposes.
Completely agree with you, Jon. So, could the date of receipt ever influence sales tax calculations, or is it mostly irrelevant?
The beauty of accounting is you talk about ever or always, those
Mhm.
absolute terms. There might be scenarios, and you have to be open to that to figure it out with your technical accounting rules. But generally and mostly relevant would be the date of receipt isn't applicable for tax calculations. The tax is typically based on the finalized sale, which is captured by the invoice date, is what the tax is. So, in case you didn't catch, it's the invoice date. There are unique situations where payment of tax obligations are contingent on receiving goods. So, people can get creative in how they set up their contract terms, and there's always exceptions of contingencies. So in that example, the receipt date might play a role, but it's rare and certainly wouldn't be a standard tax calculation.
That is a very interesting point. Coming to the next question, why is the payment date generally not considered for determining sales tax rates?
Yeah, same thing. And my blunt answer is the payment date can be manipulated. If you're trying to, and tax authorities don't like being manipulated. They want a locked in, consistent number that they can rely on, not whenever you do get paid, if you happen to get paid. Like if you don't get paid, if the payment date never happens or is stretched out over long periods of time and they pay chunks over time, it just gets too complicated. So payment date isn't reliable. It's not relevant for sales tax obligations. Taxes are, I know this sounds complicated because it's a unique, different from Rev Rec rules, but taxes are usually actually simpler and they want simpler black and white rules. So the sales tax is calculated and remitted based on invoice date regardless of when the payment occurs also. So just to recap, it's not shipment date, it's not payment date, invoice date. Example is if it's invoiced on October 1st, but is paid on October 20th, the invoice tax rate would be October 1st from then forward.
Understood. Are there any exceptions where a date other than the invoice date might determine sales tax applicability?
Again, with accounting, there's always going to be exceptions. And that's really where the art of accounting comes into play. You just have to get your tax authority on board. So really, it's whatever the tax authority says is going to be the date. And so to that point, there might be some local exceptions in a local jurisdiction or something, but it would be rare, just depending on what country you're in or what state you're in. So in those examples, shipment or receipt date could be used. We mentioned it as a contingency before. Any exceptions would be specific based on unique requirements, particular state tax rules, perhaps, but those are uncommon. I remember when there were seen as exceptions for buying things online, and so lots of companies, because there wasn't much online sales happening, and that's really been locked down now. So where there are exceptions, I wouldn't expect them to last very long, and just do what your tax authorities tell you, do what your tax accountant advisor tells you to do. And I should call that out. I'm not your tax specialist. Listen to your own tax advisors and do what they tell you to do. Do not rely on this video for your tax advice.
Yes, you're right. We have almost reached the end of our discussion today. So to wrap things up with our final question, can you summarize why the invoice date is the primary date for determining sales tax?
It's the most clear, locked in trigger when you know the work has been performed and there's an expectation of money coming, so that agreement to be paid has confirmed. It's an evidence of confirmation that money is due, and the government wants their money. They want their piece of the pie. So it marks the official sales transaction, confirming the buyer's obligation to pay. It's one that isn't manipulated, and tax authorities see that as a kind of clear signal, black and white trigger, as a finalized point of sale, making it reliable for tax calculations. So again, just another example, item is invoiced December 1st, but is shipped December 5th, just in time for Christmas. They might not pay for something until like January. That's when you might get paid for it later, and that's common. But the government doesn't want to wait until the next tax season. They want their money, in this example, in December. And they want it specifically based on when it was invoiced to reflect the completion and legal obligation of the. So the key call out here is, the reason we're kind of harping on this point about invoice date is that is usually different than revenue recognition dates. It's not when the services are completed, because that might be the shipment date as an example. It's invoice date.
That was really impressive and insightful, Jon. So with this, we have come to an end to our discussion. Thank you so much, Jon, for joining us today and sharing your insights. And a very big thanks to our listeners. I will see you soon. Goodbye and have a great day ahead.